All right, what's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate as usual. Today, it's pretty exciting. I've got Earl Co. with me. He is one of the co-owners of several properties on Lofty and, among other things. And I'm going to just, Earl, let you introduce yourself. Tell us just a little bit about what you do, what your real estate experience is prior to Lofty.
Sure. Yeah. Thanks, Joe. I'm glad I finally got a chance to speak with you, not virtually on Discord, but virtually face to face. I started in real estate investing back in 2017. Shortly after I graduated from NYU with a degree in computer engineering, I decided maybe let's try my hand at this real estate investing thing because it's not the because wealthy people don't become wealthy from a day job. They become wealthy owning assets and investing in real estate and starting businesses and such. And I've always been entrepreneurial since I was a child. So I got inspired to do real estate investing by Robert Kiyosaki. I know a lot of people started out that way, but I really wanted to get to the nitty gritty and got my first triplex in 2017, November. And everything was just off to the races from there. Since then, I've acquired 7 deals. Yeah.
Is this one your first?
That's the one. Yeah, that's a triplex.
Yeah.
Yep.
Yep.
And yeah, so I did onboard that onto Lofty back in April. And my second property came about when other folks from NYU saw that I got into my first one. He was also thinking about doing real estate investing, and then he brought on some partners, and yeah, so we got 88 Madison from there afterwards, and I have a couple other properties that aren't on Lofty yet.
Mm-hmm.
So my third one, which I'm currently living in right now, it was a assisted living facility, and became a short-term rental a couple years after that, and then now it's a rent by the bedroom / co-living situation with housemates and such. So I took over one of the bedrooms in the meantime. And yeah, the fourth one was I kind of have to keep track of, but it's still hasn't reached double digits yet in terms of my own personal acquisitions. Of course, we're probably over a dozen now with the way that Lofty allows you to scale.
Right.
But in terms of my own acquisitions, yeah, where it goes up from there.
And so were you raising, it sounds like you were, but you were raising capital prior to selling equity on Lofty?
Yes. And that was your traditional partnership, manager manage, multi-member general partnership LLC was how it's structured. Generally one per partnership rather than one per deal. Yeah, so I was able to raise a lot of funds that way. The tricky situation comes when so I've learned early on that partnerships are the only ships designed to sink. That's a
That's a good one.
catchphrase.
Yep.
Yeah.
Yep.
And sure enough, I was like, nah, we'll see about that, right? I tell the guy who told me that. And sure enough, yeah, it was absolutely designed to sink. So when a partnership is like a marriage, and when you have to eventually divorce, it becomes difficult. How do you split the child being the property?
Right.
And traditionally most investors end up getting stuck buying out the other partners, or if they want to stay, or they're the ones getting bought out, or they have to liquidate the property altogether,
Right.
which I did not want to do since these properties were so well performing. I know that it's a 0% rental yield right now. That's we can talk about the financials
We got a
later.
14 up there. How about that?
But that's 88 Madison was one of the properties that we wanted to split, as well as one that wasn't onboarded on Lofty yet. In fact, I actually did split the one of the properties that isn't on Lofty. We put that on the MLS, the traditional way you would do it, but I ended up doing retaining my equity through the new partnership that bought it. So I do still have that. So I've done it both ways, where you off Lofty and on Lofty, divestment of partners rather than the property in full.
Mm-hmm.
Yeah, so
Yeah,
we
you,
did
you
that
don't
one,
see a
and
lot
then
of that. You don't see a
yeah,
lot of that on the MLS where you're actually
yeah,
just selling the
it's a tough one.
partnership interests. Yeah.
That was a tough one. That was a tough one for sure. That took a few months to do. It cost a lot of money to do. The partners, I made them whole by the exiting partners. I made them whole, basically out of pocket, but in the form of like retained equity. Um, so I knew that I was like just locking it back in to the deal,
Right.
since I had essentially effectively bought back in, and then the new partners were able to get in without needing as much cash down. Uh, and we're able to reduce, retain. I was able to retain my equity. Now they were able to also put in almost as much money as they had purchased the house to really revamp it. It's a geodesic dome house, and really revamp it to bring it to its highest and best use. So now I think that property's, we haven't done a full appraisal, proper appraisal, probably worth 3 mil, 2.5, 3 mil at this point, even though they purchased it at the 800 valuation and put another 600 or so into it to
Is that
renovate.
one that's on the internet somewhere that I could pull up a picture of it?
Yeah. Yeah. If type up a new tab, thelunadome.com, TheLunadome.com. Pop that in. So that's available. It's doing really well, but it is not on Lofty for a variety of reasons, but mainly because I don't have the control over the deed.
Oh, interesting. Awesome. And so how did you find Lofty? What attracted you? I mean, like you're definitely, it feels like, at least from my perspective, you're kind of all in on the platform.
Yeah, yeah,
What got you
absolutely.
there, and what how did that come about?
Funny enough, I've known about Lofty since 2020, when they had their previous product, which was somewhat, they used artificial intelligence to a certain degree to analyze rental markets, and predict when the next where in a market was going to be the next neighborhood that will appreciate that hasn't yet. I think, looking back, it they had really good IP, and it did come true.
Oh yeah.
But they've shelved that IP for now, and they pivoted into this fractional real estate investing thing shortly after my interview or intro call with Max, the COO at Lofty, back in 2020. So I saw that they had pivoted into fractional real estate investing, and I'm like, that's what I've been trying to do. And I just kind of followed what they were doing for a while, not too closely, but I followed. And then when the time came, it was I also just perfect timing, I think, because I needed exit liquidity for the partners that were exiting, and at the same time, Lofty had just started doing this co-ownership model where they were bringing on properties that weren't full acquisitions, that allowing sellers to liquidate a portion of their equity.
Hmm.
So it worked out that they had not just pivoted to this entire new business model, but also to that specific niche of sellers who were not really trying to sell, but just wanted some
Right.
cash out.
And so by that point, you had already felt the pain of trying to cash out a partner, and so you could see the potential there. Or that's how the timing worked.
Yeah, yeah. In fact, like I believe Lofty started their co-ownership model around September of 2023. In July of 2023, just a couple months prior, the Luna Dome there was
Hmm.
sold on the MLS partially.
This is
And
that
then
one.
I'm
Okay,
like,
interesting.
yeah, this is it. But with the same partnership, I had 88 and 90 Madison that I needed to also liquidate. So I actually didn't. Let's see. Yeah, it was actually a different set of partners at that point. But regardless, the new partners also needed to exit. So I've got through many other people, and through thick and thin, uh, maintained some portion of equity of 88 and 90 Madison, even though it's gone through multiple partnerships at this point.
That's what, and one of the reasons I really wanted to talk to you is, sometimes when I go through some of the deals on Lofty, because I'm doing a lot of videos just talking about this deal, and sometimes when I look at what the co-owner is paying out and what their deal is, it's tough to get what's in it for you guys, right? Like, why would you do it versus just having
Yeah,
a regular partner? And so I think this liquidity issue for your partners sounds like it's part of a big deal.
liquidity,
Is there is there
liquidity.
is there anything else that's really attractive about the platform for you bringing properties onto it?
They've streamlined the governance. I don't have to deal with tax returns. I do the bookkeeping, but it's also very streamlined, at least from my end, where I've set up the P&Ls to be done every month. I could probably automate that further and have all the incomes, and just kind of switched my banking systems around so that it wasn't I had to divide it so that it each property gets its own LLC now, right? A Dow LLC specifically, and they each get their own bank account. Previously they were under a single LLC even though they had multiple bank accounts,
Mhm.
one per property, but the accounting is a lot cleaner, which isn't really a Lofty specific thing. It was just I had improved my systems in the process of onboarding into Lofty. But not having to do the tax returns is a big plus.
Right,
uh,
right. But so
yeah,
primarily liquidity is
yeah.
the
Liquidity is the
main
big
driver.
one. Yeah,
Yeah.
yeah. And let's say so 724 Third Ave. I didn't have any other partners on that one. I bought that. That was my first property. I bought that by myself with the bank being the only partner, and some credit cards and some creative financing to take that down uh, early on. And I had also put in, couple five figures worth, few five figures worth, maybe 50 grand worth of additional capital to renovate it afterwards. But pulling that money out without having to liquidate, I know that's like the Burr strategy, right? Buy, rehab, rent,
Right.
refinance, repeat. And in that refinance, well, I didn't want to refinance because that was such a good loan. It still is. I don't have to refinance. That's a big aspect of it because
Right.
one, your credit might not be in the best position, so you're going to have really bad rates. But even if it was, the rates go up and down. So when you need to pull liquidity out, can you could do a HELOC, you could versus you could also just sell the equity. And there's pros and cons to both. It's something to think about. Every deal is going to be a little bit different, and every investor is going to be a little bit different. But I like the idea of pulling the equity out so that I can reinvest it in another property.
Right. And you think that the ease of doing that is it's worth it to give up sometimes a large amount of cash flow, which it seems like some of the co-owners demand in order to buy on the platform.
Yeah, yeah, and what's really going on is the co-owner investors who are buying the shares from me as a seller, they're participating in the leverage income
Mhm.
without having the liability of the leverage income,
Right, right,
which is really beneficial for them and kind of a downside as a seller. But as long as you run the numbers and
right.
your
Eh,
property management fee plus your retained shares is gives you a rent that's greater than your principal and interest, you come out ahead still.
right. Got it.
And even if you don't, I mean, like let's say you sell enough shares that doesn't add up.
Mhm.
Like actually for this one, I'm negative, but like I'm negative $420 a month, but I pulled out all the equity. I can go reinvest that and go buy, buy something else that makes that 420 a month, no problem.
Right. And you still exert a decent amount of control over this. You're getting presumably some
I
management fee, and you're still tied to the upside of it in some way, right? Like you still have some
Precisely
equity
right.
of it.
Yeah, if
So
you have some equity, you participate in the upside, and then property management fee. So this particular one, I discounted the property management fee to 0% for the first year, but that goes up, so I'll have a little bit more. But the retain control, retain the right and obligation as a seller to continue paying down a mortgage and essentially buy back into my equity over a longer period
right,
of time, which is the remainder of the 30-year mortgage.
right. And I think because we brought that up a couple of times, I want to skip ahead and so I've
Mhm.
explained how mortgage structure works in general on Lofty with co-owners.
Mhm.
But you've mentioned it a few times. Do you mind just, you know, in
Yeah,
in
we can jump right to it.
explaining how that works exactly?
Sure. Yeah. If you switch the tab on, let's use this property, switch the tab over to the order book. Yeah, order book has the market cap, not the tab. We can stay on this property and switch to the order book. What we want to point out is that the market cap shows the number of circulating tokens. 33,290 tokens are circulating out of a total market cap of 4,677, which times $50 a share. I know it's less than that right now. That's a different topic for different conversation in the secondary market. But the market cap in the real world is, upon launch, at the $50 valuation, is 233,850. But a portion of that is locked away. Lofty controls that. It's locked away in a wallet. It's not circulating. So for all intents and purposes, and it also doesn't receive any rents. So for all intents and purposes, it's out of the picture. But that allows the rental yield to be higher. So it allows all the 3,290 token holders, or holders of those 300,290 tokens, to participate in the leverage without being liable for the leverage. So it is considered unowned equity, effectively, right? If it was in a bar chart, you'll see like that amount. It's about 30, I believe it, yeah, it's about 30% leverage in this particular property. So it's a fairly low leverage in this one because it's been several years and it's appreciated significantly. That one, it made sense to launch and pull that equity out. And two, that it lowers the risk a little bit, right? And my monthly payment remains relatively low, which is great. Easy to make up some other way. But yeah, that equity is set aside. It's owned by the bank technically, but I have the right to buy that equity back as the seller.
By
And so
paying the
everything
debt back.
else, by paying the debt back, yeah, exactly. Which dilutes everyone because now you're adding some of those tokens every single month, move from the escrow into adding increasing that 3290. So that 3290 does go up, which means the same rents gets divided across more tokens over time. And so your over time, your rental yield, which is your cash and cash return, drops down to the deleverage rental yield, which is the net operating income. Which is the return on investment that is
Your cap rate, basically.
your cap rate. Exactly, your cap rate is what I meant to say. So it drops down to cap rate. And you can see that in the financials tab. The cap rate is there, which is just what's the NOI, assuming it was constant, which of course that goes up, right, with the rent and everything, but also your OPEX may also go up. Taxes and insurance goes up.
And you're probably more familiar with Lofty's UI than I am. I know a lot of the stuff on here, they're really just annualizing last month. Do you know, does this cap rate go off of, is that based on just last month annualized as well?
No, the cap rate is
this from when they first
they so when you first launch it, they're gonna take the last month and annualize it. But as they get more and more data, I believe they just do an average, rolling average, which I do in my P&Ls as well. So I've got a column that just is like, here's the annualized based on what the data that we have right now.
So I pull up your documents so often in my videos whenever I come across one that's like, oh, this one's terrible. And if I want to explain why it's terrible, I pull up yours and be like, this is what I mean. I honestly do. I think, I'm not just saying this because we're talking. I think the way you do things as far as like, okay, you give me all your bank statement. I've just had this in a video again last night. But I think that this should be the standard, right? Like there's no reason that every co-owner couldn't give us something like this. I mean, there's no good reason we couldn't get something like this every single month from every co-owner, right? Like this isn't taking you.
They're just lazy.
They should have it, right? They should have it in their books, hopefully, right? And so I don't know. It is one of my constant complaints of many of the co-owners, and I think having that I don't know.
I do take more time with it for sure. I like to be accurate to the numbers that I provide, and so I take more time on it. But I can also automate that if, I am working on automating that to the point where I don't need to take as much time. Where I can click a button and there it is, right? But for now, it's I click a button and then I have to like manually transfer some data over, since
Right.
the banking and the way Lofty wants to see it is a little different than how Baseline exports it.
Got it. And so with that debt structure in mind, so 90 Madison's actually, this is one of the only ones that I own of yours.
Okay.
And I do because I like that what you've done here. But so can you explain how the debt on this one's
Uh,
different?
yeah, absolutely. So I didn't do it because I sold it first.
Right.
The DAO, the Decentralized Autonomous Organization, decided to implement a governance structure to and voted, with a supermajority vote passing, to allow for the cap rate to effectively increase to the cash and cash return by burning those equity tokens via mortgage paydown, principal paydown
So
every
so they
month.
basically let the DAO or the vote let the DAO take over your position with the mortgage, right? Or not, although you're making the monthly
Kinda.
payment, but they're getting to make additional principal payments. Is that right?
Correct. Yeah. So that's great for the DAO and all of the investors,
Right.
including myself. I have some, but that's I am also a member of the DAO, so that's nice. But yeah, the DAO benefits in that they're over time their token there's less dilution because they're participating. They're diluting, or they're diluting themselves by burning. So basically, they're undiluting themselves.
Right.
The 50%, right? What we've decided and voted on is that 50% of the net operating income every month is used to pay down the mortgage, and this is a good target. This particular mortgage is a good one to go because it was a 10.125% rate. So it also benefits me because while I lose out on the opportunity to buy those shares, I'm still making my mortgage payment, but it's accelerating the mortgage. So if you look at velocity banking and other strategies, you can pay down the mortgage in a way where you're compressing that 30-year timeline and massively decreasing the compounding that's happening
Mhm.
with that, especially with that high interest rate. So over time, I actually end up paying less in interest. So the DAO is helping me pay less interest, and I still get to buy my shares back in via mortgage payments. So
Got it.
it's a unique structure. I haven't seen other properties, other DAOs follow it, but also a lot of the properties that are onboarded have really good rates. So if
Right.
you want to time travel and you are an investor and you want to buy property with pass rates, that's
Right.
that's that's time traveling, right?
That
That's
no,
super
that
cool.
that's I talk about that as being one of the main benefits, or one of the really interesting benefits, especially right now, is that you can
Mhm.
buy into a deal today that has the benefit of those rates from quite a while
Yeah.
back. This is, when I was asking you about, what's in it for you on Lofty, there's a couple of thoughts that I have about that from the co-owner perspective that I'm curious if you do. And I think that you probably do, just based on some discussion. One is, uh, on some of these, you have the opportunity, because of how fickle the investors are and how much prices move,
Yeah.
to sell equity and then buy your own stuff back at a discount. Do you take advantage of
Yeah.
that quite a bit?
Quite a bit, yeah, absolutely.
Yeah.
So I don't remember if I did it on this one recently, but it did fall below par, and it's been floating around $48. But
Yeah.
with fees and all that, it
Right.
comes out where I can probably buy up to like when it's up to like $47, and with fees it'll come out to 50, which is the same as if I had taken $50 and just did an additional principal payment.
Right.
And I'd still get one share back every single month. Uh, but yeah, I do. The seller effectively serves as a hedge on the downside, unless they really don't want to buy anymore. And that was one of the things with the
Hmm.
legacy properties on Lofty, is that there is no seller who's trying to buy it. In fact, they sold all their shares and offloaded the entire property.
Right.
Um, but here you can kind of like pad the downside. But this is also a really good opportunity to have the automated market maker, the liquidity pools, um, give you access to cheaper shares, which
Hmm.
I take advantage of for sure, particularly on the legacy properties, but more recently often on the co-ownerships ones as well, because sometimes either the seller is
Some of
dumping straight into the
those.
pool.
Yep.
Yeah, some of those. I've done it.
Right.
and and uh, and if not the sellers, then other investors are like, oh, bad news coming maybe this month, or they just need some liquidity because of other things, right? Emergencies, they need a
Right.
new car, whatever, right? um, for whatever reason they want to liquidate their shares instantly, they have the ability to do that on the properties that have a liquidity pool opened. So I try to launch the liquidity pool as quickly as possible. It also helps decentralize it quicker, and it also helps desecuritize it quicker.
Awesome. And so then the other thing that so I always look at as an investor on these platforms, this Lofty in particular, is that, getting to diversify is something huge that I didn't get to do in the 20 years I bought real estate in real life, right? Like it's so hard to get a truly diversified portfolio. One of the things I'm curious about is if there are co-owners, and if you've done this or you know of, that you bring your property to the platform and then you swap some equity with some other co-owner just for pure diversification. And if you wanted to
I've
do
been doing
that,
that, yeah.
yeah, is that something that you can do um without paying fees? Can you just
uh,
truly swap equity, or do you have to
uh,
what do you have to
I'd
do to
say
make
so.
that happen?
Yeah. So, Lofty, legally speaking, record uh, has to record ownership transfers, that even ones that don't happen on their marketplace.
Right.
Since it's decentralized, it runs on the Algorand blockchain. So, I've done peer-to-peer swaps, even, trustless instant swaps
Mhm.
through Access Swap and other. I've been mainly using Access Swaps, but even when it's somewhat trusted, I've received wire transfers straight to my bank, and I send them the tokens. So
Yeah.
that's one way. If you don't want to do that, instant swap where USDC gets an atomic swap into in exchange for tokens, and then we send an email to Lofty, please record this transaction. So I've done that. In terms of just using the marketplace, typically I will just sell my equity and
Right.
build up my portfolio diversified. Now I'm saying 2 dozen plus properties, maybe more. I don't know, but I've split up. But I've got a few shares here and there. But then the majority
Right.
being still the ones that I still have, and that I didn't want to fully liquidate. Plus, you're required to maintain a 10% 10% of the floating equity in not necessarily in your wallet, but in your account. So it's programmatic. It actually won't let you sell more than if you've fallen below that 10% equity
Mhm.
now. But yeah, I've bought other people's property. It's great because I don't have to manage those properties. It's like
Right. Right.
yeah,
Well,
that
that's
allows me to diversify without having to diversify my brain space.
yes. Yep. I know it's I mean it's such a game changer to be able to do that in real estate at all, right? To just be able to
Yeah.
I mean now, I've bought more property. I bought probably a decade of properties over the last, few months across, Lofty and several other platforms.
Mhm.
In small pieces, not a ton of capital. But so yeah, that I think it's why I'm really going
Yeah.
all in this space, because I
Yeah.
think that it's got to be the future of, real estate investing for a lot of people.
Yeah. I'd say it's the present, and not only that,
Well, that's true.
we can't, like, people our age are like, we can't buy houses anymore. Mortgage rates are too high. Well, I addressed all of those. We don't have the down payment. Well, Lofty addressed all of that by
Mhm.
allowing shares to be purchased and participating in the equity growth with as little as $50 or maybe even $20 on some of these properties that are on sale. And some of the properties are trading higher than that because now there's a business on top of it that is being valued at a premium. But that's also great for the seller in that, if I were to sell 88 Madison, I'd only get appraisal, minus all the broker fees and all that. So I'm
Right.
not gonna get that. Now it's trading for 20% over market, which over the real world market, because there's a business on top of it that's being valued
Mhm.
appropriately, in my opinion, because the short-term rental business is selling that on the MLS. I did that with the dome, and I think I would have gotten more had it been sold on Lofty instead, but I did that before.
Right.
But it worked out because with launching on Lofty, like if you need to do massive renovations and upgrades and all that, it's gonna be tough when you have too much democracy.
Yeah, no, I agree. And so that's one of the things I think could be a drawback for someone, especially if you have a sort of dynamic business plan, right? Where you have okay, like, as for example, some of your properties are like, okay, this is the property right now, and this is how it's operating, but we could refinish the attic, we could refinish the basement, we could add units.
Yeah.
That seems like it could turn into a nightmare with, a number of investors needing to, depending on how the vote goes, right? I think if you put forward a full proposal and said, okay, let's do this whole thing, but if you were trying to like accomplish it in steps, you could get stuck at some point. Can you see that happening, or is that
I
have you
I
felt like your
do see
investors
that.
are
Well, I mean, it's the initial vote should be clear enough. Here's what we're going to do. Here's the total budget, and do it all at once. Because if you try to split it up, you could, right, do it in stages.
right,
As long as those stages are, hey, this is a good stopping point. Not like
right,
we're halfway through this and we now have sunk cost fallacy. Is it a nightmare? I wouldn't say it's a nightmare. Yeah, I wouldn't say it's a nightmare. It either passes or it doesn't. If it doesn't pass, it's not really a nightmare. It's just like, oh
right,
well, I
right.
couldn't expand it to the way I wanted to, but that's okay. My role is the property manager, and as well as like a minority stakeholder at this point, right?
I guess that
If
the difference
the
is too
majority
is
doesn't
I
want
think
it.
the reason I think that you have that thought too is you're taking a sort of measured and well planned out approach to any sort of changes that you're doing versus like some of the DAOs we get a vote, hey, let's change this to a short term rental. That vote goes through without knowing, like, well, what are we paying for furniture and what
What
are
are we
we,
paying for? Right,
you know,
right, right.
do we have a
Exactly.
permit to do that? Like all sorts of different things that
Oh
maybe
yeah, that's tough.
that could
And
happen. But
you're supposed to
that
like
I don't
more.
imagine that happening to you, right? I mean, I think that
Yeah,
that's yeah,
I think part of that is that the investors who voted for it, if they did vote for it, they didn't know what it entailed. They were not educated themselves, and like you need some degree of education. You can't just be like
right,
passively. You could passively buy this, right? But you need to know what you're buying, and you need to know how it kind of generally operates, and like you need to at least know what to ask, right? Knowing what you don't know, so that
right,
like, oh, okay, well, I don't know how much that's going to cost. Well, let me ask. Let me counter this. Okay, well, what is our what is if a co-owner propose, and it could be any co-owner, it doesn't have to be the seller, but if they're like, yeah,
mhm,
let's do this thing,
right.
well, okay, how much is it going to cost? What's the timeline? All the things that you would typically
Right.
ask a GC.
That's been one of my criticisms of Lofty as far as how their governance structure works, is that for certain things, I feel like there should be a forced like discussion or question and answer period before a vote happens, right? Like sometimes we get a vote and we don't have a ton of time to decide on it.
Yeah,
And um, and there are, sometimes I'll have 100 questions that I'd like to get the answer to before I actually
yeah,
made the decision one
and
way or another.
I think that's a technical limitation,
Yeah,
partly, but like I mean, they don't have the scale yet to build out that software to automate that governance and the
right.
discussions around it.
It would. I think
But yeah,
part of it, I think, would be, you know, if more investors just got on the Discord regularly. I think
yeah,
like a lot of that
absolutely.
happens in there, but it's not. If that were moved onto the platform at some point, it might force that a little bit. But
A little bit,
getting a
yeah.
little
I,
bit off
I think
track,
they're working on that. Yeah. Anyway,
right?
and
One
I
of
don't speak for
so
the company, so there's that. I'm
right,
also
right,
speculating
right.
myself.
I think you seem to be one of their biggest fans, though. I mean, you like, I think they've made your business really go in a certain direction. Would you say that, or and I was
Yeah,
planning
they
to
they
ask
do
this
listen.
later,
They
but
do listen to they do listen to their users for sure, and especially
right,
their sellers that are active and have a not necessarily a financial stake. I don't, but I do to a certain degree. Lofty success is my success because it means I can onboard more properties. There are more users
right,
to buy. There's there to buy the shares, and on the other hand, I can also buy more properties, right, from other users who we're bringing on. So the quality of the investor, really, the risk is in the investor, not the investment.
yeah,
The quality of the investor increasing on the platform is what I'm striving for, and I'm
right,
doing these videos and teaching some classes in the near future to onboard as many educated investors as possible.
right. No, I'm glad you're doing it. It's a big part of why I'm doing a lot of videos about it. Like I think it's a space that needs more people that are going to come on and look at something other than just what's this number here as far as projected return,
Number go up. Yeah.
right?
It's fun.
Exactly.
It's fun to trade real estate like I trade my crypto. It's quite fun
Right.
for sure. And
Um,
taking advantage of market inefficiencies and arbitrage opportunities like this one. Like, okay, dump shares because I know it's going to go down. What a little bit of insider trading, but that's legal in real
right.
estate.
Right. Well, that's what. So I mean, I bought a couple of this one when this yield, because it's so silly. Like this property last month not yielding anything does not change the value of this property. Like it just shouldn't,
Right.
right? And so I've got a certain number, and when it goes below it, I pick up some of this one. So and that's how I
Right.
treat all the ones that I'm buying on there.
Yeah.
Let's kind of change gears a little bit. This is actually a
Hmm.
question I got from a couple different people because I put it out there like, hey, I'm going to interview a Lofty co-owner. I think there's a lot of people that are thinking about bringing properties to the platform and
Okay.
kind of want to understand how the logistics work. Um,
Hmm.
how does money move back and forth between you and the platform? When does that happen? Who
Sure.
signs for stuff? What can you do versus actually Lofty having to sign for the DAO at any point? Any
Yeah.
of that stuff that you might think would be interesting or necessary info for someone bringing a property to the platform.
Yeah, I've gone through a few things. So onboarding is fairly straightforward, and if you're a potential seller, speak with Max. Get on a call with you. Get on a call with me. He often sends people my way as well. And initially it's your property, and you're transferring it to a non-arm's length transaction through a non-arm's length transaction via a warranty deed or a quitclaim deed. So you can sign on both sides. You are initially the owner of the acquiring entity, and your whatever prior, if you have managerial control of signing for transactions, and you get the authority to do so. On the selling side, then a quick claim into the DAO LLC allows that process to effectively complete. And the other things that you need is a inspection and an appraisal. So three major documents. Not much else to that. The appraisal is necessary for the valuation to be determined, such that they can release the number of shares that is requisite for your property, the market cap. So that determines the market cap. You can list at 105% appraisal value plus any closing costs, which includes the costs that you had to front to get the appraisal and inspection reports and the quick claim deed, as well
In
as
addition to that,
any
oh,
furnishings and all of that.
got it. Yep, that's what I was going to ask right there.
I was gonna say, yeah, furnishings, things like that. If the place does come with furnishings or appliances, even any recent renovations. Now, if the renovations increase the appraisal value, then that's kind of factored in already.
Mhm.
But if it's additional things that don't increase the appraisal value, then I suppose you could itemize those and add them as additional shares. So let's see here. What else? And then once it's now in the DAO, the Lofty has it's in the operating agreement. So just take a read through that. I wish it was more comprehensive because I have operating agreements that are a lot more comprehensive
Right.
than what Lofty has. But it's straightforward enough that it's easy to understand. But there's Lofty has authority to sign on behalf of the DAO LLC for certain transactions, largely capital ones like selling it and refinancing, things like that. What can you do as the original or majority owner on behalf of the DAO? Well, I think anything that's a capital transaction, you need to sign for on behalf. As a property manager, it's about $1,500 expenses or less for per item. You can just buy it, right, and get a reimbursement from the property or from the LLC, from the DAO LLC, for expenses proportional to your retained ownership. But anything that can fall into the day-to-day operating expense can just fall into there and come out of the net operating income, which is partly why this is yielding zero, because they're standard expenses and the income wasn't
Mhm.
as high, right? But that's 1 month, and then next month it's a short-term rental. It'll
I'll go
fluctuate,
back
but
to the 14. Sorry about that.
no, that one is also a short-term rental, and that also fluctuates.
Right.
Some months are gonna be high, some months are gonna be low for this
Um,
particular one. But yeah, anyway, so as far as what can you sign for? Oh, one thing is like, okay, well, 3560 St. Albans is fighting the HOA. So that's fun. And the co-owner, I'm not the co-owner in that one, but the co-owner decided, I am a co-owner, and that I have a couple shares,
Mhm.
but the co-owner needed to retain legal counsel to fight the HOA because the HOA decided to pursue legal action against the property in the Dow LLC in
And
this
this one's
in
also
this
a
in this
short-term
matter.
rental?
It was a short-term rental, yeah, yeah.
Yeah.
Well, hold
So
on. Legally
no?
speaking, it is available for lease, but all of the guests are also co-owners
Oh,
temporarily
interesting.
until they
Okay.
decide to retain. That is the argument, and I think it is a legally sound argument. The legal counsel seems to think so as well. Plus, Missouri actually has laws that allow and explicitly allow for not necessarily laws, but recent prior cases that explicitly allow for the leasing less than less than even 30 days as of residential property as residential use and not commercial use. And the HOA is arguing this is commercial use, and we're like, no. First of all, I guess our owners, because of the
Mhm.
unique DAO structure, and also because short-term rentals are legal anyway,
Got it.
or
Yeah,
not prohibited use.
that's so in my day job I sell a lot. I just work with real estate investors to buy properties in San Antonio. Um, I sell a lot of short-term rentals, and one of the early discussions I always have is if you don't want to have these fights, we just avoid HOAs entirely. There are
Yeah,
some markets where
I
I think
agree.
that's just not possible, but yeah, it's tough. I mean, or it took, we had some it took a little while to learn that lesson,
Yeah.
right? Because sometimes you look at their rules and it seems like you're perfectly fine,
Mhm.
but they still want to fight you about it anyway.
And this
So,
wasn't initially a short-term rental; like it converted into one. Um, it was initially bought as a flip.
oh, interesting.
Yeah, and then it was furnished, and then they started operating it, and then it was finally launched on Lofty a few months later. But it was a whole rehab project that they were initially going to flip,
Hmm.
but decided to retain and see how that goes. And so far, it's doing all right. I think for its you can see the COCR is not that great, but that's a high purchase price and high low price to rent ratios are going to be a deciding factor there.
Right.
And it does rent out, but it's fairly seasonal. So in the summer, it's going to do really really well, and that's when the co-owner is going to decide to sell more shares. But for now, he's
Um,
retaining a
I
majority.
knew I'd end up asking a question to get us way off track, but I do want to get back to a couple things.
Mm-hmm.
So more like really your interaction with Lofty as the co-owner. So like when we see updates get put onto the Lofty property page, are
Mm-hmm.
you able to actually go and update your co-owner properties, or is it something that you send an email to Lofty and they put something on their page, or what's actually happening there?
Yeah. Oh, well, yeah. So as a
So like
seller,
either these property updates or for something
yeah.
to get changed on here.
Oh, I usually just text Max, but that's fine.
Yeah.
Uh, yeah, an email or text message. If it's something small, like when you get a chance, can you do this? But like, maybe he'd prefer an email. I didn't really ask, but sometimes I'll email, sometimes I think. But every single month I do that is an email because it's you know packed with
Right.
information. At least mine are. Here's all the links to all the statements, or I send them as attachments to all the statements, all the P&Ls, all the financials, etc. So that is an email. Here's the mortgage statement. Here's summary of that. And any major explanations for like why things are the way they are, because it increased this much, higher rents, or maybe it's dropped because less income coming in, or big expense came through this month, whatever it is. And I try to spread that out. So like if it's so as far as like communication goes, I don't have any access. I'm not an admin. I cannot just
You
change. If you
can't
want
change.
something to
Yeah.
change, no, I cannot change any. This is their marketplace, their listing. You have
Hmm.
some degree of centralization there. Um, it's their website. I don't have access to any of that. If I want something changed, I can request it change, and Lofty typically responds very quickly for
Yeah.
sellers and co-owners, especially for inaccuracies. They want to be as accurate as possible, as quickly as possible. So like a property just launched in Aurora, Colorado. A friend of mine actually brought him on board, and a link was wrong. So I'm like, hey, link needs to be updated, and
Right.
it's fixed within seconds. So that was cool. But that was of course with immediately upon launch, I caught it.
Right.
If it's like later on, maybe how serious is this error? I also can like, hey, you know what? It's not that big of a deal, but when you get a chance, or like, no, this is massively like it's causing investors to change their decisions, then
Mhm.
it'll be a lot quicker.
Got it. Yeah, no, that makes sense. So, and the reason I ask about that is, like I've asked them to clarify things and seen them fix stuff on here. But then at the same time, there's, I've had some co-owners that I've interacted with on the Discord, and they're like, "Oh, I keep sending them an update and it's not on there." And it's like, I always wonder, like, is that really believable? Because like some of them are up there right away, right? And so that hasn't really been your experience. So I know you did say usually they update it right away, but for the most part, when you're sending them stuff, it shows up on here pretty quickly.
Yeah, and yeah, again, it depends on like the inaccuracy versus like they just need some time, or like if it's, I think some of the things has been, oh, this thing hasn't been updated yet. Well, partly because the co-owner or seller or property manager hasn't provided the information. So I
Yeah.
like often like, I try to get it in. They want you to get it in by like the 10th at the latest. I sometimes, a little bit late. But as definitely before the 15th, but the
Yeah.
more time you give them, here's the information from the beginning of the month, for the previous month at the beginning of the month, as close to the beginning
Right.
of the month as possible, so that they can update it in the middle of the month. And if it just hasn't been updated yet, that there's some sort, there's there's a point, someone is being backlogged,
Yeah. Yeah.
or they just don't have the information, right? You could say he said, she said, or put the blame on
Right.
whatever, not updated yet. If someone's asking like, hey, is this been updated yet? Well, I'm like, here's the raw data.
Yeah.
If you want it right now, but if you don't
Yep.
have the, if I don't have the raw data, then I'm not going to give that to you. I'm like, I don't have the raw data. Sorry.
Right. Right. And it's one of the reasons. So I mentioned this to you. There's probably 4 or 5 co-owners who I follow their stuff and I really like, and I own a piece of at least one of their properties. And they're the ones that I think are doing all the things that you're doing as far as like really giving us good data, trying to be as transparent as possible. And then, we have ones that there's, it's a whole spectrum, right? And so
Yeah.
they one of the things that, anytime I feel like I see a lot of pushback, like, oh no, this is a lofty problem. And so getting to talk to somebody who, you seem to have very few lofty problems relative to some of the other co-owners, right? And so getting that from
Ah.
you, like understanding how that works. I honestly wasn't sure because of how active you are in the Discord and stuff, if you had some additional relationship with Lofty. So when you first explained,
No.
this is where I stand. It was good to know, right? Like you're not
Yeah.
coming in here and changing this stuff. You're going through the same process that other
Yeah.
co-owners are
Yeah.
doing. And okay, no, it's good.
No, no, no. Yeah, if something's getting updated quicker, like I don't know, maybe I get preferential treatment, but like, why?
Probably not.
Probably
It's
not.
probably about
Probably
your
not.
process.
I'm not an investor of Lofty. I don't own any shares of Lofty AI Inc. I don't own, I'm just using it as a marketplace. Like I would use
Right,
Redfin. I don't know,
right.
Zillow. But there's a close relationship in that we have to work together to be able to operate more effectively, more streamlined.
And
And
so,
yes, I can fault them for some things, but not some of the things. Yeah, like I wish they would just send me my shares every single month, but I understand that that takes some time. They have a
mhm,
schedule and all that, but like, hey, I've been waiting on my shares for like 2 3 weeks now from my mortgage payment. I would like that so
right,
that I can start receiving rents on the shares that I paid for
right,
from prior
right.
months. Some of that is my fault. I could have given them more time. I should have sent the mortgage statement up sooner, things like that. But then also like, well, how much time is reasonable? Okay, well, I did a peer-to-peer transfer. Okay, that's like severely deprioritized because one,
Right.
Lofty's not making any money off that, right? So it takes whatever it takes when they got the time to like record the transaction, but it'll get recorded eventually. I've
Right.
seen as long as like six
It is
weeks.
part of, once you have those like daily rents, it creates this like urgency in your mind about some of this stuff that, like, I think as just a general real estate investor, you wouldn't necessarily think, right? We think of in
No,
months typically, not in
right?
days. Yeah. So,
Yeah, so like they by virtue of giving the investors the benefit of a daily rent,
mhm,
it actually like they kind of shot themselves in the foot. In just my opinion, but because now now there's an expectation that as soon as I make a transaction, I wired the funds to the co-owner, especially if you're doing peer-to-peer. There's that expectation that things are going to move faster, but
Right.
the systems haven't been built yet, and I think they could work on that, but at the same time, it's like, all right, they're gonna prioritize the things that make them money.
Right. And that's what I always have to remind myself how early we are in a lot of this,
Yeah,
But
yeah.
and they are, so I'm invested on several other platforms that are doing something similar, and
Mhm.
I'm getting paid monthly or
Monthly, yeah,
quarterly, right? So
quarterly,
yeah,
even, yeah,
so
right.
they
So
are
like
just trying to
getting paid is
create a
insane.
tougher standard for themselves.
Yeah,
But then it just creates that urgency in our minds where, okay, now I want to just do this faster because it is
yeah,
actually, making some difference. So going back
yeah.
to when you're bringing stuff to the platform, do they give you any sort of recommendations as far as like what they think? So one of the things I've noticed a lot is we've started to see these like rent credits to get stuff to a 20% yield. One,
I've seen it.
do they give you a recommendation to try to hit that, or do you just feel pressure from? Not specifically you, but do you have any pressure to hit certain return numbers to get on there, or are
Yeah,
they talking about
it's
any
a
of
little
that?
bit of both. I'd say a little bit of both. So if you're launching a new property, and depending on how much volume you want over time, really your flow rate, the flow rate of tokens, right? In physics terms, in this case, okay, do I need to cash out 50 grand in 2 days?
Hmm.
Some properties I did, right? Well, I'm gonna have to discount, or I'm gonna have to provide a massive rent credit to incentivize that. And some things are some, it's a little bit of calculus that you have to do.
Yeah.
Maybe not actual calculus; it's just algebra,
Right.
really. But to some degree, it is calculus. So, not saying like I do calculus equations or anything like that, but like if I want to move 50 grand over 3 months versus moving 50 grand over 2 days, that's a different discount, it's a different incentive. How do I get, and then just onboarding, you're going to want, there is the recommendation, especially for, there's a recommendation if you want to sell a meaningful number of shares to have a double digit return, at least 10%.
Hmm.
Hit that 10%, ideally, go for 12. Uh, and and if your property is like severely deleveraged, which some of my properties that I'm onboarding, in the process of onboarding, will be completely deleveraged, I don't expect them to sell that quickly without some sort of additional rent credit or massive discount, which I like to do the latter, but it really depends on how much you are trying to liquidate. Um, and like, so for example, the Aurora, Colorado property that just launched by Eric, and he opted for a rent credit
Hmm.
because, and I actually talked to him about that. I was like, why are you doing a 300 something dollar rent credit in perpetuity? Isn't that going to cost you a lot? He's like, oh, no, I'm not selling that much equity. So like, it's only going to cost me like $60 a month, whatever. Right.
Hmm.
Uh, in terms of the rent credit, because the majority of it is going to come back to him. So net, because he's not selling majority equity, but if you are selling majority equity, well, maybe a rent credit in perpetuity is gonna like cost you a lot over time. So maybe you'd rather do a short-term discount and allow people to effectively participate in the equity growth that you've gotten by sharing a little bit of that, and
Right.
therefore your benefit is higher volume, higher trade volume in a short amount of time, um, faster decentralization, faster liquidity access. And then how does that money move around? Was that one of your questions?
Yeah, I did ask that. Yeah, and great.
Let's see here. Well, it comes through as USDC, and I typically just transfer that USDC to my Coinbase and then withdraw to my bank account. But you can also do a withdrawal through Lofty, and they'll convert your USDC into and then deposit into your bank account via ACH
But
or
also
wire.
when you're managing or as a co-owner, all of the funds, all the rent collection, all of that just happens in your accounts that you've created, and then each month you just send a Lofty what is due to to the owners.
Yeah, and some people, some property managers, some putting on property manager hat now, not as a co-owner, but yeah, some property managers like to or prefer to have their property management LLC receive all the rents, and then but then like you have to 1099 send a 1099-K to every single property, every single client, every single DAO LLC. That seems excessive. So I just create a DAO LLC account at inception that receives all the rent. So, the bank statements that I upload isn't the bank statements of my property management LLC. I don't upload those. I don't want to do that.
Mhm.
But it's the bank statement of the DAO LLC. All the rents come in. Airbnb sends a 1099-K. It's straight to the DAO LLC. The DAO LLC is the W-9 is for the DAO LLC. Same thing for Verbal. It simplifies a lot of the accounting, legally speaking, and let's just send those 1099s to Lofty to handle for their CPAs to file tax returns, the 1065 partnership tax returns every year. So as far as so the rents come in. Each property gets its own DAO LLC, gets its own bank account. I don't like sometimes I have to split them manually. I don't like doing that because it's more labor for me.
Mhm.
But I'm like, I also make virtual accounts, virtual credit cards, virtual debit cards for each property, and they'll get auto categorized accordingly based on the purchase. But if I have some things I just can't, splitting up the utility bills. So the internet is split across all the DAOs because I share the internet. So I'll just split that up every month manually. Same thing for price labs and Hospitable for the short-term rentals. That's some of it is a little bit manual. Like I said, I can work on further automating it so I don't take as much time doing it every month, but it's also not that bad.
So one of the things that, and I think some of these questions came from some other users that had asked me, these are something, and I think that sort of the directions for some of this stuff, where it comes from, is the curiosity of if you're doing that, right, you're reporting numbers and you're the one that manages the bank account where all the money comes in. Is Lofty doing anything that would help, any kind of due diligence or any sort of tracking that would alert them to if a co-owner was just committing fraud? Like, for example, you're just reporting half of the income for the property, and is there any way they'd catch that?
So, okay, well, here's one way. If I was fraudulent, I would just buy stuff on Amazon for myself and bill it to the DAO LLC using the DAO
Mhm.
LLC's debit card, and it'll show in the statement. But what is that purchase for? Right?
Right,
No
right,
one's really asked about that. I mean, but here's the receipt if you really want. I don't send the receipt, but I do
right.
log. I mean, I can pull them if someone really wanted to. And for some things, we do need to ask, of some other sellers and property managers and co-owners, hey, what did you buy that thing for?
Right.
Look, if you have one share of a property, you actually need to treat it as if you own 100% of the property.
Yeah.
That's the best way to do it because you
Right.
have ownership. Take ownership
Yep. I
of the
completely agree
responsibility
there.
of the finances and stuff. You might not have access to the bank accounts. You don't need to. You can look at the statements if it's provided. If it's not provided, then just question the P&L. The P&L is required.
Yes.
Is Lofty doing due diligence? No, they don't have time for that.
Right.
It's up to you they have no vested interest either. They don't own shares of these LLCs. They have no vested interest in verifying the validity of the P&Ls. So do it yourself. People are just too lazy. And that allows for bad actors to stay bad actors.
Right.
As far as due diligence and the numbers and things like that, I could misreport P&Ls if I want to, but
Mhm.
chances are, if something is an error, then it's more likely it's an error from my end. But I don't think anyone's brought it up, but maybe no one's checking. That would be that's what
Well,
I'm
that's what
saying. You need to check.
so one of the ones where I think some people that I've talked to started to wonder about this is Airbnbs that got brought to the platform that had amazing trailing financials, and then it looks like there's no bookings, right? And it would be very difficult to find out if they were just sticking guests in there, charging them, but using, say, separate accounts. Maybe the VRBO account never shows up in your P&L, something like that would be
Oh,
extremely
I mean,
difficult to
that's
catch.
just straight up fraud.
Right, right.
uh Now, okay, how do you check on that? Well, let's show me the reservations, right?
Yeah.
If there really aren't reservations, then it will be evident, and it's tough to see. So me, again, transparency is a big part of how decentralized governance can operate effectively.
Mhm.
But here's the Hospitable link. You see what I see in terms of the metrics, the calendar, the calendar requires a login, but the metrics are visible, and I also include in my monthly exports the KPIs and all the list of reservations. So like you can see, like if I wanted to delete and then like remove, okay, well that's fraud and just straight up theft. You wouldn't know, I suppose, but that would be a lot harder to catch if the data was there, or it'd be a lot easier to catch if the data was there. I guess it's
So that's one of the things that I think as investors on the platform, we should all be pushing for maybe more standardized transparency. Like a lot of the stuff that you're doing as far as sharing that data is just not happening across the board. And I think part of it is a lot of us owners don't necessarily know what to ask for, right? But I think that
see what the data is.
Right.
Follow the model of the Madison properties to see what you should be asking for.
Right.
And well, if there's something that you could ask me for, you as a co-owner potentially, ask me like for that data, because I can probably provide it. If you're like, hey, I want to see the receipt purchases, it'd be super tedious, but I could, here's my Amazon account. I don't
Right. No, when I start to see you split up like when you split up expenses across them, like I mean you get into really great detail, and part of it is because you have multiple, properties kind of acting as a single hotel, so you have a lot of shared things. But do you think that so one of my questions is, what can Lofty do to attract more? What do you think they can do to attract more both co-owners and investors? And one of the things that in my mind is to push to like create a standard for transparency that's required of people bringing properties to the platform. Do you think that's something they should do, or do you have other thoughts on, answer either one of those questions, right? Do you think that people should be basically forced to operate more like you're operating, or are there other thoughts that you have as far as attracting both sides?
Okay, so Lofty's position. Well, okay, I'm not speaking for them, but the way I see that they would see is that they're not responsible for how each of the DAO LLCs operate. It's up to each of the DAO LLCs to operate, because they are trying to stay away from being. Well, one, these tokens are not securities, and they want to keep it that way, right? So the more say they have, the more managerial control they have over the LLC, which they really don't have, right? They're delegated for signing on specific capital transactions, and that's about it. They could say these things are so and such are required because the investors need it, and such is the P&L. The bank statements are not required. Should they be? Well, no, because some property managers don't operate that way. I provide them voluntarily because I operated that way, because I created a DAO LLC bank account with the DAO LLC's name. Legally speaking, it's the DAO LLC's statements, not mine. Right. So some things they just can't require because it's not everyone operates that way. What other things? KPIs, metrics, things like that. Maybe the short-term rental should be, but I think it's really up to the co-owners to demand that data. And if they have to bring up a proposal, so be it. Propose a vote to require the property manager to provide the necessary data, as if they have direct access, as if they don't need to have direct access to the Airbnb accounts, but as if they have direct access to the Airbnb accounts and the purchasing accounts and all that.
Right. And now from attracting more investors to the platform, do you think pushing that responsibility onto the investors is really going to help with that? Or I mean, that's what I see.
It's not really people I see it's not a push.
Well,
it's just that you shouldn't be trusting people more. Like this is supposed to be a trustless platform. Like, okay, there's trust, there's necessary trust, but trust but verify, right?
Right.
So if something's amiss and you're not happy with your returns, question it. As any member of any traditional partnership would. Because of that, I mean, like part of the things that cause a partnership to fail, any partnership, whether it's a DAO or non-DAO partnership, is that like the manager is not providing valuable information and insight to the investors that they are technically responsible for. And typically, I mean, like I've had monthly calls. Maybe that's something that the DAO LLC needs to set up for each DAO LLC, right? Like, hey, all the owners of this, we have a weekly call, monthly call, not weekly, that's excessive.
Right.
Monthly or at least quarterly call. They're
Yeah.
like, hey, you guys are all shareholders. You have a quarterly shareholder meeting, any public corporation. Treat it like that, as even
Right.
though it's like not, but it treat it like that, and then I think everyone will be happier.
Right.
That anyone can ask questions about that, but that's I like, look, if you want to vote to like man, I don't want to say it needs to apply lofty wide. I don't think there should be much of any lofty wide thing, because they're just a marketplace. They're not responsible for how these properties operate.
The reason I kind of go back and forth on that, like in my mind, I think of Lofty as the eBay of real estate. And I think if you think of it in that model, I'm 100% okay with just pushing everything off into, not having specific criteria. But when they want to be the NASDAQ of real estate, well, NASDAQ requires all of their businesses to provide audited financials.
That's a good point.
We're not like, which is what I think creates a lot of the ability. But at the same time, if you're not going to have a security, it's really hard to
not a security
to go into that direction, right?
Not a registered broker dealer, right? They say that they're very clear about that. I think,
yes, yep.
Personally speaking, I think they should remove the word NASDAQ, because that's a trademark.
Yeah.
From the front page.
I agree.
That's just my opinion.
But I
I'm
mean,
not legal counsel.
And I think that when I think of them as the eBay of real estate, I have zero complaints about how things operate, because then I know,
because that's what it is.
I have to. It's just whatever the seller.
It's what it is.
There. Yeah,
it's a Craigslist event. Well, okay, maybe it's not a Craigslist of real estate, but it is an eBay of real estate.
I mean, they're creating the situation where the buying and selling happens, and they're doing a little bit of, if there's issues,
validation.
but
they've blocked me from like, no, you can't launch that. I've tried to onboard a couple properties that they're like, no, you can't launch it like you can't launch it like that, or you can't launch that at all, or we can launch it but only privately. Like they do have certain standards for the listings that show up on the platform publicly, at least, right? And if you want to use their platform for private listings, they have the technical capability to do that. You're stuck with the traditional, I gotta fundraise myself and see if they'll accept shares of real estate, which they can totally. They do that. There's some of the properties you don't even know about. So
basically they've created something that you could sort of almost use as a white label product, where if you put up your own page and listed them. That's interesting. It's one thing I was curious if they were ever going to do. I didn't know they were already.
Yeah, no, they can. Absolutely. So if you're like, hey, some of your properties, for example, as a traditional real estate investor, if you're like, no, the owners don't want to launch this publicly and allow new owners and new co-owner members to have governance rights and things like that, but we want the optimization of blockchain technology. Right, the efficiencies of blockchain and DAOs in particular, even if it's not decentralized, you gotta. But if you've got a handful of owners, 5, 6, 7, 8, wouldn't it be nice to not have to write up owner or an organizational resolution just because someone wants to provide more capital to the business and have more shares for it?
Right. No, that's awesome.
Do that programmatically and have internal on the Lofty platform, have your membership shares move from your Adobe PDF into shares on the blockchain, and everything's become so much more streamlined.
Right. And so that's a great thing. It's interesting to see they're doing that, because like I said, it's something I was curious about. That leads me to another one of the questions I had for you. What do you think that they could either be doing better, or that they should do in the future, or even maybe something that you know of that they're doing that we should know about that they're not?
Yeah, they need to open source the governance. I have absolutely, right now at this exact moment, I have absolutely no idea how votes are calculated.
Right, I've seen you talk about that a few times.
Right, that it's like super majority. I mean, like, okay, super majority, but you need a quorum. Did we even get a quorum? What tokens, which wallets have voted, and which one? Now, some of it is on blockchain already, which is nice. And you can kind of see which wallets voted which way, which is super nice, super cool. I think they need to do more of that, but also really just the whole governance should not be done in a type form email. I think that's just do things that don't scale, but they need to do things that do scale. I understand do things that don't scale as a startup. but they definitely need to do things that scale. And one of the things that scale, in fact, I could probably do this. I'm starting a fund, a decentralized autonomous organization fund, and that's the crucial thing that I need to have AI develop for me. Super easy, straightforward, super easy in the sense that like AI is doing it, but like I understand it's complex, but can make it so that all governance decisions can be done programmatically, automatically, without intervention of Lofty. Right. That's gonna help with them being a marketplace and not a registered broker dealer of securities. Decentralize this and also just like reduce their operating like costs and expenses and like time. What was the second part of your question?
I mean that anything they could do better or anything that they should be doing. I mean, I think that
that's a big one. Is that governance? I know they're working on it already, right? We started to see some of these features roll out, but like it shouldn't be a type form. If I get an email for governance, I should be able to go onto. It should be a transaction just like a buy and sell button, right? And it happens on the blockchain.
Yeah.
Right, and it's immediately recorded, and then the blockchain determines the vote, and whether or not it's open source, the methodology, the algorithm for how the votes are calculated needs to be transparent. I don't need
you want to be able to verify.
I don't need to see the code. Yeah. Like,
Yeah.
Okay, did this really go the way they said it did? Trust by verify, so that basic thing I think should be. Now we can see how certain wallets and owners vote pseudonymously, but we need to be able to vote that way on chain automatically, and I hope they're working on it. I think they're working on it, and I know they're chunking it up in parts. I know it's a matter of time, but I also don't think it should have taken this long.
Yeah. And that's what a lot of times I'll bring stuff up to them and they'll be like, "Yeah, it's on our to-do list." And it's, I think it's fair. It's a small company.
I'm sure.
They're tackling
the Kanban board must be like
a brand new, it's really a brand new thing they're doing. But at the same time, before I'm going to put a lot of money on the platform, there's certain things that I want to go, a certain way. So,
I suppose. I mean, like, you're not really like the way you think about it, if you're the buyer, right, and the investor, think of it like a traditional partnership. You're not putting it into the platform, you're putting it into the partnership, into this property. So demand of your property managers what you want to see, right? I don't think it necessary. That's what I was saying. It's like, no, I don't think you have to wait for Lofty to do that, but the governance needs to happen. You need to have direct communication or indirect communication with your property managers on a regular basis, maybe not to the extent that they're like overworked,
Right.
But to a reasonable degree, if you have a sizable share and you want to see monthly or quarterly Zoom meetings with the co-owners and particularly the property manager, then demand it and put it up for a proposal. If it doesn't get voted, then democracy won.
Right. No, I think it's interesting, and I think part of it is you and I view this platform a little bit differently, at least and I think that that's 100% right. Like to be successful on the platform right now, you have to have the mentality that you're talking about. The thing that I question is, will it ever become a big platform if that's the only type of investor that's going to do well on here, right? Like and maybe you just have some super users that sort of enforce this across a bunch of the co-owners, and then you can have sort of all these smaller investors just riding the coattails and being passive.
Okay, so passivity is to a certain degree, like we want that, right?
Yeah.
We all want that. That's awesome. The nature of DAOs, and particularly DAOs that are not securities, require that you can't be too passive. So you look at any crypto project that's a DAO out there and they have governance, right? And sometimes you can delegate. Maybe some of those features that like we need to just copy from the crypto world is like delegated governance. Okay, whatever this guy says, my shares go with them.
Yeah. Yep.
Right. Cool. Right. And that's kind of make it look more like a republic than a democracy. And there's efficiencies to that. That's why even the Western nations, the rural nations, are like democratic republics. there's
Mhm.
efficiencies to that. But yeah. So I don't like some of the things just do need to be built out. Um, are just features that do need to be built out, but that takes some time. I get
Right.
that. I don't. Yeah, as far as like, okay, transparency, kind of covered that. The governance is a big thing, and the more that these decentralized autonomous organizations are autonomous, the better we can get towards collective ownership of private property. And this
Mhm.
is like, as the leftist in me is like, yeah, this is the way to go. And other, post labor economics folks such as David Shapiro on YouTube also say similar, share similar concepts, and are advocating for this because um, the system of hypercapitalism is not conducive to uh, long-term prosperity of society, and this allows for that. And yes, it looks like it's capitalism. It is capitalism for
Right.
sure,
Right.
but like the question is who owns it, right? Who owns the means of production? Who owns these properties? Who owns the farms? Who owns who owns
Yep.
these assets? And if it's like regular people like you and I, that's a lot better than like the billionaire upper echelon class.
Yeah.
Right, we don't need
I'm,
BlackRock to be owning all
I'm
these
hurt.
properties.
I'm hurt. You assume I'm not a billionaire, you know?
I mean, you wouldn't be on YouTube, I feel like.
No, I'm just kidding. I'm just kidding. Um, but awesome. So Earl, I really appreciate you being on here with me today. I think there's a ton of
Yeah.
value for the people, for my 30 or 40 people who are going to watch this. It'll probably be 100, 150 or so. But I feel like, one of the things is, even though I have a very small viewership, everybody that watches is like somebody who's actually active in this space, right? Who's investing. A lot of them talk to me on the Discord regularly or send me other messages. So
Yeah.
I think there's a ton of value, and
Yeah.
I'm really hoping that we can just keep growing this community, because
Yeah.
the more people on both sides of these deals, I think the better it's going to be for all of us. One of the things I just want
Absolutely.
to ask you as we wrap up, one, if there's anything, you want to pitch as far as, any of your properties that you think we should know about. I have noticed one thing that you've offered to, like, do a short consult with someone who wanted to bring something on the platform. Any sort of service, anything like that you want to share with us.
Yeah. I mean, I've got I can I'll share a link. Uh, I'll share a link for you to book a call with me if you'd like. I do some coaching as well, one-on-one mentorship, things like that. That's on the table. And if you are like
Okay.
looking to onboard a property, I do get a referral fee, which is awesome. Lofty pays generously for each and any property that gets onboarded onto their platform. So they are trying to grow the platform in terms of like the sellers. Of course, we also need to work on like the buyer side um,
Okay.
for it to have any growth. As far as like, I've got a couple like property. I can't do that publicly, but I do have
Okay.
some like pre-fi deals going on, which are like, these are in DAO LLCs or going to be in DAO LLCs and going to be launched, but they, for one reason or another, requires capital upfront that Lofty cannot provide, or not cannot enable
Right.
me to raise. Those cannot be publicly shared because then they are securities
Got
until
it.
they're desecuritized. So I have a few of those, but we can chat, we can DM on that on Discord if you're
So for
interested. I am
anybody
on Discord.
watching, oh, go ahead. So for anybody
No, that's it. I
watching,
was just on Discord.
yeah, I'll take that link that he gives and I'll put it in the description, if you're watching this on YouTube, it'll be in the description below. I always forget until the end to say like and subscribe, but please do that. But yeah, so yeah, Earl, if you just send me that link, I'll put it in there. Anything else if you think of after the fact, I can add whatever into the description, or as a pinned comment if you want as well.
Okay.
But yeah, I think that's, unless there's any last things you want to share, I think we can go ahead and wrap this up.
Yeah, no, I think that's great. It's a great chat, and I look forward to having more people on the platform and more people
Awesome.
becoming real estate investors, one way or another.
Awesome. Thanks a lot, Earl. I'm gonna go ahead and cut that recording now. Okay, well, I'm
Sweet.
gonna at least cut the video
Here's my
now.
link.
Why can't I stop this recording? Okay. Yep. See, this is what you have. And I'm not even a boomer, you know that? Where is usually there's like this? Yeah, there we go.